Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. So looking at natural gas, the bears are in absolute full control. We had our double top at 2994, and then it's been nothing but lower highs and lower lows. The bulls desperately needed the inventory report to be a bullish catalyst to turn around this trend, and all it got was another leg to the downside. And look how weak we were on this dump today. Just an all-out dump, a weak bounce attempt, and continuation with a close at the low of the day, essentially. So the bears are absolutely in full control. We've been saying that for a long time. We were looking for that short-term oversold bounce. We did get one, but it was obviously very short-lived. And now, again, we have the RSI approaching some oversold levels. The 1-hour RSI is right at 30. 4-hour RSI is just under 30. So whenever that occurs, whenever we see these shorter-term time frames get oversold, definitely a lot more cautious as a bear to lock in profits and knowing that short-term bounces are coming. And we can look to play those short-term bounces if we're well aware that the bounces are going to be short-lived and we need to lock in that profit quickly once we have it and then set stop losses to make sure that we don't get stuck on the way down, because we clearly know the bears have control of the trend, and that's been very clear for quite some time now. So I'm looking at resistance of 2875, this little bounce attempt that rejected, and then on up to 2923, the next 2 levels. In terms of support, let's look on the daily time frame, and that's down at a couple must-hold levels, 2823, and then down to the absolute must-hold 2764, that low of support. So we've known to be bearish on natural gas ever since this pattern broke. We had our low, high of the bounce, higher low, lower high, lower low. Bears took over right here on January 31st, and it's been nothing but lower highs and lower lows. The bulls have not faked us out in any way, shape, or form because we just keep setting lower highs and seeing rejections and weakness and bear flags leading to continuation to the downside. This most recent little bounce attempt, clear little bear flag, and then continuation. So we're closing at the low of the day. We've got one day left in the week. And look at that weekly chart. That is all bear momentum to the downside. And if we lose 2764 support, that is going to ruin the uptrend we've been in since the start of 2016. And it's going to be a huge red flag for the natural gas bulls going forward. So it's a pretty important end of the week here. And pretty much no matter what, we're not going to see this weekly chart show a bullish reversal candlestick. The bears are in full control. It's going to take a lot of work for the bulls to turn things around. And we'll be watching the hourly chart lower high pattern for any indication that the bulls are turning it around. UNG, there's that lower high, lower low pattern, very weak bounce attempt, followed through to the downside. Weekly time frame, must hold support is 685, and we're rapidly approaching that level on increasing bear volume this week. So the same scenario, must hold level 685 for the bulls. Otherwise, the higher low pattern since February 2016, a year ago, is ruined. So we'll check back in to see how the week wraps up over the weekend. I appreciate you watching, and we'll see you then.